You're listening to a Mint podcast brought to you by HT Smartcast.
Hi everyone, welcome to another episode of Why Not Mint Money. So today we have our guest as Mr. Rahul Jain. He has been heading wealth management at Nuvama. Prior to Nuvama, he was with Edelweiss's Wealth, and he has over 14 years of work ex in the wealth management space today. And today he will discuss with us some interesting topics and trends in the wealth management space, specifically in the HNI segment.
Welcome to Why Not Mint Money, a personal finance podcast where we help you understand basic money concepts and share strategies for you to build your wealth. So let's get started with your money journey.
So hi Rahul, good to see you, good to have it at our podcast today. So what are some challenges that our HNIs are facing in India today?
So I would say that as this whole financialization is taking a rapid place in India, where the way to invest of savings in India have significantly changed in last 10 years, I would say. Real estate, buying house, gold, and FD might not be the most common thing these days. And I think the behavior is also changing. And I think while this happened, I think the HNIs who also save large amounts of money are facing some challenges. So I think one of the most important thing which I find about when I travel to across the India, correct, and that is what we call Bharat these days, and meet HNIs there. I think one of the things which I firstly see is that there is no access to new ideas, or not much access to new ideas in that sense.
Okay.
A lot of people still believe that public listed equities is the best way to either they do to directly investing to stocks or buying mutual funds. So I would say that they are good options, they are good alternatives. But are there better new ideas? Answer is yes. And I would say that is access is not there. So that is one. Second is, if you look at Anil, a lot of HNIs are also chased by multiple wealth managers, multiple advisors, and they end up doing a lot of activity with a lot of multiplicity of people. What happens because of this is they are not able to get a single view of their holding portfolio. And effectively, what I have seen that their ability to understand how much the money they've invested across different wealth managers coming at one single shot is not available, which does not give them a great idea or the right idea of how much money they have invested. So that is second. Third is that I would say no one is talking to them or giving them the holistic view of portfolio. There is a lot of product conversations. So if I am a wealth manager, I have given only you small cap, mid cap mutual funds, I will talk about small cap, mid cap mutual fund. Some bank guys give you some fixed deposits. Another wealth manager give you some insurance. So everyone will talk about their set of products, but no one is giving a holistic view of his portfolio and the returns what he make out of his portfolio. Effectively, and I somehow feel that rather than looking at only the returns on product, the HNI should focus more on the holistic returns on the portfolio. And I think that is one of the other things which is missing. Also, one of the other points is that there are a lot of changes which are happening on the taxation side also. So keeping the upkeep there is also becoming difficult for them. And then the last, which I find is another important point, which at some point of time HNIs will start thinking very deeply, is about succession planning. Are they thinking enough? Or are they finding enough advice on that? I think I would say the answer is no. And I would say, so these are 5 clear challenges which an HNI is in the country right now.
Right. I agree completely what you say with you, Rahul. So we will discuss some solutions to it further in this podcast. So, but the main problem which I have been also hearing is how do they get a centralized view of all their investments? Is there any solution around it? Like if an HNI is having investments, like you said, they will be investing through a lot of platforms, a lot of advisors. So is there any platform or any place where they can get a centralized view of all their investments?
So I think there is this whole concept of consolidated account statement, which is sent by the DMAT participant, which is CDSL and NSDL, which gives them a holistic view of their investments on the DMAT side effectively. So most of the now investments are in DMAT, correct stocks,
this would include alternatives and PMS, AF also.
PMS also comes. AIF is now mandatory in the DMAT, so it might not be coming right now, but in coming times it will come for sure.
Okay.
The only thing which is not covered right now is insurance.
Okay.
And there will be some. I would say only insurance would be left out over a period of time. That is how I think about it. So using that, they can have a consolidated view, and we at Nuvama also build a platform where client can also have a crisper view of his consolidated portfolio if he uploads there. And we will also now giving the client a provision, which we start providing, is that he can see his portfolio held at Nuvama and also held away outside, and he can input his data, etc. also if he wants. So that allows the client to have at least a picture view of his
overall
portfolio, and also in our portfolio holding area, we are trying to integrate with account aggregator, which can also give you a consolidated portfolio statement. So I think there will be works which are happening. And in next 6 months, at least 3 to 6 months, we will have a very good view of his overall portfolio, and we can give him a good snapshot around the same.
Right. And so coming to the second question, Rahul, what are some biggest money mistakes that HNIs make, and how they can avoid it?
So I would say that HNIs have a better access of information, etc. Correct?
Right.
Their retail counterparts, because there are a lot of people chasing them effectively and giving them advice.
Correct.
Because everyone wants their wallet share.
Correct.
But I would say that still there are very common mistakes like their counterparts in retail side. I think it is not very different. I think one of the things, other common mistake, which is that most of the HNIs don't follow the asset allocation philosophy. And asset allocation philosophy is, according to the best risk management, it allows you to have a better EQ. So I keep saying that in markets, IQ is important, but EQ is more important. And having asset allocation, which allows you to do diversification, risk management, EQ also becomes stronger. Right. And what does asset allocation mean? It's a bifurcation of your portfolio between equity, debt, and some part of gold. And it allows you to be sane. So, for example, if you are a client, correct, and you're an investor, and you're 100% equity, and markets have gone down by 20%. So your normal behavior would be that let me sell out most because I've already made a lot of losses. And suppose if you have completed it and the market is going up, then also you'll not feel good about it. So giving asset allocations in that sense is diversification, which allows you, when the markets go down, you can convert some part of the debt to equity. When the markets go up, you can convert some part of the equity to debt, and it allows you to have a very robust portfolio in that sense. And I would say this is the best risk management. This is the best way to manage your emotions during the volatility of markets. And also it allows you to compound your money consistently. So I would say that this is first, which people don't do. Second is, I also feel that since HNI gets advised by a lot of people, he has too many stocks in his portfolio, too many mutual funds in his portfolio, and also taking advice from too many wealth managers. I would say that makes his portfolio very complex, very difficult to track and monitor. And at the end of the day, if you're unable to track and monitor your portfolio well, someday the laggards will deplete your returns of the overall portfolio, and you'll be unable to track. Third is that, as I spoke in the previous question, people don't look at their portfolio level IRR, which people should do. They get excited by certain products, or they become very disappointed by certain product performance, but they should look at overall portfolio, which will give them a better, clearer and macro view of their portfolio, what returns they have made. Also, two more things. I think people generally get swayed by a lot of trends in the market, a lot of conversations. So I've seen people doing derivatives, people doing option trading, fully invested in only small cap, mid cap, because that is running up. And I think that's not a good thing. And the last and most important, I would say that most of the HNIs right now are not looking at a long-term thought process and also not looking at compounding in that sense.
Okay.
According to me, looking at long-term and thinking of compounding.
Like why that? Yeah, right. But why is it so? Like, why is it that they are not unable to think long? Yeah.
So I would say is because we also track our portfolios too much on day-to-day basis,
Okay.
and that disturbs the equilibrium of a mindset. So, for
Hmm.
example, when you buy a house, correct,
Hmm.
and or when you buy a real estate, that has been the history of India, where most of the HNIs used to buy real estate. If you buy a real estate, you don't go and check its price 2 times in a day, correct?
Yeah. True. Right.
Correct,
Yeah.
and that you never do.
You can never.
You don't track it once also. I think you will get to know a couple of people, but you don't do it every day and day out.
Right.
So it you allow it in your mind somewhere that this is for long term.
This
Here
is for
you
long.
want to be very opportunistic in your mindset. That
Yeah.
someone said, "Oh, the market is not looking good. Acha, let me exit something." Someone is saying
Yeah.
market is looking very good. Let me buy something more
Yeah.
extra and leverage it out. So I think all these thinking, too much of conversation, too much of looking at data and all sometimes makes job tough and difficult, and that is one of the reasons why I would say people are not very long term in their thinking.
Right.
If people
Right.
might be long term in thinking, three people in coming at giving you advice that hey, this does not look, this does not look, this is something, some problem. Your mind is always trying to have too much of information around it.
Right. So the best advice would be like have patience and have a long-term mindset. Is what you would advise.
Have a long term view,
Correct.
because effectively your money at a 12% types will triple in every 10 years. Correct.
Okay. Yeah.
And then the compounding can become massive. In 30
Yeah.
years, at a 12% return, your money becomes 30x.
Right.
And in 40 it becomes 90x to 100x. So that is the difference which is
That's
there.
the difference. Okay. So
And that is where the compounding makes a big difference.
Right. And so yes, Rahul, moving forward with the third question, what are some lesser known investment opportunities that HNIs should consider in their portfolio?
Sorry, I didn't get a question. What are you saying?
What are some lesser known investment opportunities that HNIs should consider looking at? Some lesser known.
So I would say that
Yeah.
So I would say there are a lot of new ideas which are there, especially for the HNI categories, and where there is a lot of opportunities which can be which can create alpha over the normal generators. For example, private equity markets, where the private markets is a big one. Venture debt is also becoming big one in that sense, where you give debt to startup companies which are very short term in nature, duration, and you generate a good interest income from them.
Right.
They are a little high risk, but you generate good interest income. Then there is a whole story about commercial real estate, which is a growing sector in India right now, seeing where India is right now. There is special opportunity type where you can make a significant amount of return in that sense, which is also very exciting. Venture capital is another important one. Startup funding is again a big one, which is very interested in HNI space. People also do it. So I would say that all these new strategies, new thought process thinking, which is now getting evolved, because the India construct as an economy is also changing. The needs for supply of capital, need of demand for capital, now are changing rapidly. India is one of the largest startup ecosystem, correct? So they need capital. And how long they will depend on the foreign capital, for example. And this is one example. India is an infra-hungry country, and that requires a lot of capex. Yet there would be government which is spending, but there is a lot of money still needed, correct? So these unique opportunities which are available, I think these are great products which in the part of asset allocation, some part can go there. And through AIF, Alternative Investment Fund route, I think these are opportunities which are available right now in the market. Effectively.
Yeah, I think we can have a separate podcast on this actually, so that you can break this down, these concepts for the HNIs.
Interesting topic to talk about, because every category has a lot of depth and a lot of thought process thinking and a lot of differentiation. And we always suggest that people, HNI should not put all in these alternates. but some part of the portfolio can always be in these part of alternatives. So this is one, Anil. The second is that there is this category called structured products, which are very interesting in that sense, where you have Nifty participation and downside is protected. You can have a 2x Nifty participation with downside.
Yeah.
So these are unique ways of generating alpha on clients' portfolio. And generally, if you ask me, when your net worth or your portfolio size goes up from 1 crore to 5-10 crores, your need for differentiation of products also goes up. And that's why going after these new ideas can be very, very helpful for HNIs to generate alpha.
Right. Okay. So Rahul, you spoke about, you mentioned, the succession planning, right? That HNIs don't do it well. So the next question I have is that how can HNIs effectively pass on their wealth to the future generation, and how they can just go about succession planning is what you talk about. Is there some ways which they can look at? Yeah.
So I would say that I think succession planning starts with writing or getting a will done for yourself.
Okay.
And creating a well thought through succession plan. And also you can be done by forming a trust. So that is something which I would say every HNI should do. That is one. Second is they should, I have seen that a lot of people does not tell about their investments to their family members. There is no intention about it, but it is just I would say inertia to spend time on that. I think that is something which at least I recommend to every of my client investor, that at least your wife, your kids should know about investments you have, family investments. So that is second. Third is that if you can do the basic paperwork right, also can have your life make simpler, that having nominees everywhere. I think that's still a big challenge, where on every single investment, have you put up your nominee or not? So I think if you're able to do these three, at least you are doing some bit there. And then there are firms, there are companies who help clients on legacy planning and all. I think getting in touch with them can be a good idea for HNIs from future planning point of view.
Yeah. And okay, that makes sense, Rahul. So the next question I have for you is, what are some tools, some technological digital tools that can help HNIs today with their portfolio, or keeping updated what is happening with their portfolios?
So at Nuvama also, I think we run a very hybrid model of servicing. When I say hybrid, the wealth manager is there to advise, and the digital platform plays a very, very important role. And I would try explain that here as well. So I would say that digital platforms have three main usage for a client or an investor. First is that it gives you a seamless transactional interface. For example, if you want to transfer your funds, you want to change the name of nominee, you want to put a new mobile number. There are a lot of change the bank account details. In trading, you want to buy some stocks on your own rather just calling up an advisor. So I think all these things can be seamlessly done. So it gives you a lot of transactional convenience. For example, right now, so if you're supposed to pay me 10,000 rupees, correct, you will not write a check, correct? It is not convenient now for you guys, correct? You also want to do a UPI or you do a transfer online, correct? That is how it's So I think the HNIs is one segment where they have a lot of usage of technology at their workspace, at their home, etc., while buying, ordering food, booking a cab, buying a ticket for movies. So they want that experience here as well, and that's why this transactional experience is very helpful. Second is that the digital platforms or tools are very important or critical for helping them monitoring and review their portfolio. A single window where all of your portfolio can be shown, what type of asset allocation you run, how much equity you have, how much debt you have, how's your portfolio doing on a yearly basis, and then telling them how much tax needs to be paid, how much long-term, short-term capital gain you have done. So I think all those things are which helps client in terms of review and monitoring. And third is that I would say, since I say a lot of HNIs are very interested in gaining more knowledge about markets, products, etc. I think digital tool platforms gives you a good avenue where you can get your content for yourself and can always keep your knowledge on the financial markets, stock markets, different product categories. And I think that is how digital tools can be very, very helpful.
Right.
Giving you a seamless transaction experience, helping you monitoring and review, and also upkeeping or increasing your knowledge base.
Right. So, yeah. Right. So, the next question I have, Rahul, for you is, see, there are so many advisors, wealth advisors now for HNIs, right? Even Nuvama is, you're heading Nuvama, so a lot of competition is there, among the wealth advisory companies. So how does one HNI should figure out that, okay, what are some, I know there are a lot of things to keep in mind, but what are some 2-3 few things which an HNI can look at and decide which advisor or which wealth house is right for them?
I would say this is my favorite question till now, and we have Nuvama had done a lot of work on this, and I would say that first and foremost for a consumer to, when you look as an advisor, is to look at knowledge scale of his advisor. And I would divide in two parts. One is someone who understands markets, trends very well, because keeping yourself ahead of trends will always help you making a better alpha on the markets. So that is one. The second part of knowledge is that how much that advisor knows about the products what he's advising, because there are a lot of deeper points inside, like charges, taxation. Like AIF has multiple taxation ways, correct? PMS has so they have different taxations across different product categories. So knowing about those, so that is where the knowledge is important. Second is that I would say that experience of the advisor is also important, because what happens is, what I've seen is that in a volatile market environment, when client is not thinking sane, RM or the advisor always ensures that he thinks same. So I have seen times where clients calling me up saying, so when we invested in SIPs, client said that my daughter is Rahul 10 years old and I want to invest till 21. The corpus which I generated when she becomes 21, I want to give it to her. Correct? That is what he decides. Now after 2 years of putting up SIPs, market starts falling down, and a couple of his friends call that I think we should sell. He calls me, sir, I also want reading my SIPs. I told him, I tell him that, see, you invested this when your daughter becomes 21. She's just 11 and a half till now. Why in a hurry? So I think that is the sanity which advisors bring. I think if you experience, chances that you have gone through these cycles is always high. So your chances of becoming sane will always be high. So experience counts a lot in the investment part of the world. Because you've gone through cycles. Third is that I always suggest clients that don't pick up an advisor who himself is very biased into one category or who's aggressive by nature. Because biasness, aggressiveness in financial market, I would say, is not good. Pick up someone who is balanced, who follows asset allocation as a philosophy, as an advice. I think that will allow you to remain balanced, and it will also allow you to create and generate wealth over a longer period of time. That is third. And fourth, I would say, analyze that credibility and trust. And I would say that is the most important, because credibility and trust in the investment part of the world, also in the financial services part of the world, is very critical. So I would say someone who's honest. I think another dipstick which I keep telling people, which we also practice a lot in Nuvama as well, is that how many years that advisor has spent in that particular organization. Is he changing his jobs too frequently? Is he long term there? If he is long term, you can ensure that you can be very sure that he has been long term because the organization is good and he has been having a good client relationships. He's doing well in life.
True.
So, and also from credibility trust point of view, you can also check through references and all. Your friend, your family, how has been your experience. So I would say these are the large four parameters: knowledge, experience, his bias, whether he's himself very aggressive, and fourth is credibility and trust.
Yeah. This you break this down quite well, Rahul, really well, because there's so much confusion around. And as an HNI, so many people try to reach you and advise you, as you said. And these are some good things that HNIs listeners can take into
Yeah, that's true. And because we also try to develop this with our set of people, Anil, I think that is what we also think day in, day out.
Yeah. And with so many advisors also reaching out to the HNIs, there is so much of information clutter, okay? Like, so lots of apps, lots of news that an HNI watches. So what is the best way that an affluent individual can stay informed, like the best way possible?
So I would say that the affluent individual should not try to stay too much informed because that will create a lot of chaos in his mind. And I think too much information making digestible and then finally leading to actions can create a lot of confusions. That is, so I think he should stay relevant. So I would say I've always suggested that a consumer or an investor should not have too many wealth managers, because too many wealth managers, too much info coming in might be problematic for an individual. Second is that there are you have always curiosity to know more about a lot of stuff, but be only limited to certain set of websites, or I would say certain set of Twitter handles. So I would say that there are a lot of financial websites, and it depends on different people taste effectively. But don't go on too many also. That's what I would say. I would say that if you're very keen on knowing and stay afloat, read the Economic Times newspaper. Well, that is very informative. It gives you a lot of insights in that sense, effectively.
Right.
And if you want to look at content, I think Nuvama website is also very good in that sense, where we give a lot of content to clients on about different aspects. We also run a webinar series effectively where we get clients coming and get in touch with the fund managers directly when they talk about India's story, how their strategy is there. So I think those are different platforms which people can use, and webinar as a concept is multiple organizations. We do it. Sites, website is also important form. But running through a webinar can be very interesting because you hear it from the horse's mouth. And you understand the deep
straight from the fund manager
strategy.
The insights are straight from the fund
manager. That is very helpful. And I think limiting this number, following certain set of people will always be helpful.
Right. I think the webinar one is one super pointers, because you are hearing directly the things straight from the fund managers, the asset manager. I think that makes sense actually, apart from a lot of things, right? I think
exactly.
Right. And so this very insightful conversation with you, Rahul. And I think listening to this, it would be a great help for people to listen and make informed decisions. And that's what we aim at Mint also. Finally, the last question I would have is, what is a good IRR? I know IRR would depend on a lot of things, a lot of factors, but is there any general rule or principle around that, this is the good IRR I'm making as an HNI?
So, I think your return expectation always depends on your risk profile. And if you are low risk, then your expectation is that if you're low risk, then you'll put most of your money in bank. And bank generate around 6 to 7%. If you're able to generate 9 to 10%, in that sense would be good. If you're moderate risk taker, 12 to 13% is good. And if you are good aggressive, if you're genuine, you can take some risk, then 14-15% is good because that is how I think about it. And when I say aggressive, does not mean that you should start doing trading in derivatives, do all small cap, mid cap. We will still do the asset allocation model. But asset allocation breakup also between how much debt and equity also depends on your risk profile. So that's why I said that a lower risk should think of a 10 to 11, moderate 12 to 13, higher 14 to 15 to 16, 14 to 16 types. So that is how you should think about it from various genres. And I would say that the aim, at least what we do, is that generally try to generate a 300 basis point alpha on generally what the same risk profile would have generated, broader markets would have generated for you. That is how I think about it. And that is our thought processes.
Right, Rahul. I think so. We have covered lots of things, and I'm looking forward to have more conversations with you in future.
Sure.
Some interesting.
Sure, and it was great.
Take care.
Bye-bye.
Yeah, bye. So this brings us to the end of this episode. If you want to know more on this topic, you can reach out to me on my Twitter, which is @posteanil, or on my LinkedIn using my full name, that is Anil Poste. We will be happy taking your suggestions. Thank you for tuning in. That's all from our side. See you in the next episode.